How's it going, everyone? My name is The Trading Savage, and in today's video, we're going to be talking about why you should not use large language models to trade for you and what you should use instead. So why shouldn't we use large language models to trade? Well, I'm going to explain later that they do have a part to play in our trading bots, but we can't just rely on them to identify and make trades for us. They're language models, they're not quants. They're good at predicting the next token in text, but they're not good at minimizing the errors of predictions of returns, for example. They're just not optimized for numerical data. And there's a big lack of consistency with large language models. So for example, every time you prompt a large language model, it's going to give you a different answer, and it's going to give you maybe a slightly different methodology as well. There's a trading cutoff with large language models. They're not up to date with the latest and greatest news or information about the stock market. And they're slow. It takes trading bots at institutions milliseconds to analyze data and make a trading decision. Whereas with ChatGPT, it's going to take ChatGPT like a few seconds, and the trading advantage is gone. So does your trading bot even need ML in the first place? In my opinion, if you're just starting out with trading bots, you need to start simple. Your goal should be to predict the return from today's close to tomorrow's close. And you can at first use logic to do that. So let's say technical indicators. If technical indicator X is below technical indicator Y and Z is behaving this way, then buy. Otherwise, sell or hold. Then you can apply quantitative machine learning models and LLMs as needed if your data set is able to really make use of them. For example, if you have a lot of indicators and if you have news data, if you have stock analyst data, for example, social media data, then you can use large language models to identify and analyze critical data in the text. So a critical question you need to ask is, what's your trading bot's goal? Is your trading bot's goal to replicate your actions when you're away from your keyboard, for example? Or is it to find trends and relationships in a large amount of numerical and text data, for example? So here we have a data set showing a stock's close by day, and return T plus 1 is the change from, let's say, August 2nd to August 5th. It increased by 65%. So your trading bot wants to try to predict, my trading bot would want to predict, what's the return from the close at August 2nd to the close at August 5th. If that return is positive, then let's buy. If it's negative, let's sell. And if it's around zero, then it might not cover all of the commissions and other fees. So let's hold, for example. So I would just recommend you start with simple logic. So like I mentioned, if the 20-day SMA, for example, is above the 50-day SMA, then buy it. If it's otherwise, sell or hold. So what ML models can you use to trade? So if you really need quantitative ML, then I would recommend using a linear regression, a random forest model, XGBoost, or a light GBM. And I would highly recommend you watch the StatQuest videos on these before you try to implement these in your training bot. So where do large language models excel? So first of all, you need to find all this data yourself and supply your training bot with this data. And this data might not be free. Sometimes you can find it for free, like SEC filings. Sometimes you might need to scrape it off of the internet, such as with social media or even stock news. Sometimes you might need to pay for an API that gives you this data. But I would recommend you use large language models to analyze SEC filings, news, social media, and analyst research. And what it can do is basically analyze the sentiment of all of these data sources and supply that to your quantitative machine learning model to make trading decisions for you. So this is just a baby example of what my ideal training data would look like. So as you can see, we would have some indicators here, and we would have a way of condensing any text, news or analyst research, for example, into a sentiment score or some kind of other quantitative measure that you can use to feed into your quantitative machine learning model. Another question you need to ask yourself is, what's your data edge? So data can help your trading bot identify opportunities and relationships that it may have glossed over. Now, alternative data can come from some surprising sources, and some of these sources are very expensive. I would say alternative data in general is relatively expensive. That can mitigate the advantages you get from trading with it. But you can use, for example, satellite data, like let's look at Walmart's parking lot. What's the percentage of the parking lot that's full on a particular day? What trends do we see in credit card transaction data? Any particular vendors even? What are the numbers of cargo ships coming into different ports? Or what percentage of a shipping yard is full? You can also get data on students. So for example, maybe tuition-related data. You can find data on DNA tests and other health tests. So when a DNA testing company goes out of business or declares bankruptcy, for example, they might sell their data, and that might get into the hands of alternative data vendors. So you can use all of this data to augment your trading bot and gain an advantage that other people might not have. That edge, that data edge, is going to generate alpha or returns for your trading bot. So in conclusion, LLMs, they're tools, not traders. They're not silver bullets. They can provide a lot of great insight for a quantitative machine learning model to make trading decisions, but they're not going to, in my opinion, it's not a good idea to have them trade for you, Trading bot behavior should be consistent and predictable. You don't want to have your trading bot make some great trades one day and then make all the wrong trades the next day. You want to be able to measure the performance and have it be consistent and predictable over time so that you can rely on this trading bot to make consistent trading decisions and consistent profit for you. And finally, hallucinations are fatal when real money is on the line. So you just want to be really careful about what model you're using and why. So thank you guys so much for watching this video. I really hope that you learned something about trading bots today. If you wouldn't mind, like, subscribe, and I'll see you in the next video.